Good morning, guys. Hope you're doing well. Big humble pie for me. Yesterday, I was anticipating a reversal in risk, and we didn't get it. And it's a little bit foolish because looking at the risk calc, we had a big change on the 24-hour, and so that was probably a big clue that the herd are going long. When they go long, it normally indicates that the indices is going to fall. So I kind of ignored the risk calc a little bit, and I guess it would have depended on what the herd did after the Powell speech, and we can't forecast that, but we could have had a heads up what that herd were doing prior to that speech, okay? And they were going long. And they've actually gone quite long on the 24-hour difference. If they're going to continue to do that today, we'll be risk off on Monday. And we've got a horrible yield curve, and the fact that the herd have gone long. So we have to be really careful, and I'm stopped out on the S&P trade, and it was quite brutal, to be honest with you. So it's definitely a humble pie, and we also looked at the robot logic last night as well, and we've got a no-go condition. If the VIX is really high, if it's above 20, then the robot's not interested at all. It will just sit on its hands, won't open any trades whatsoever until that VIX comes below 20. So I think we can look at the VIX on the QDB scores. Yes, we can. So that needs to be below 20, right? We had an 11% move yesterday in a single day. Because of that, we went off, risk off, and things puked. And the dollar, it rose, and the yields pumped as well. So yeah, basically, they've gone long pound. Right, they've gone really long pound since the open. Let's sort these out, and we can see what the strongest and the weakest ones are. Pound, okay, pound USD, pound Swiss down there. Euro pound at the top, okay. So that could be a good long, because we can see they've gone long on the pound, so the pound should fall. That can maybe do okay. EA at the top, second top, and then Euro CAD third. Yeah, so basically I'm just going to be taking it easy today. Once I've done this bulletin, I'm going to wrap up, consolidate. I need to make notes, like in my journal, because you need to make notes and things. You don't want to keep repeating the same mistakes as well. It's crazy, basically. So for me, my lesson learned was to pay more attention on this cell up here on the top right, because we had an indication that the herd were going long. If they go long, then they could continue to go long. So that's the note that I'm going to make. I was hoping that they were going to go long and then sell, hence that video that I made yesterday, and they did. It went exactly as forecast, but then of course they flipped after the Powell speech. So very difficult. That's the spreadsheet taken care of. We can look at the indices and gold. Gold, see, we made a buy. So, well, the thing is, we sort of fluctuated a little bit. They went long ever so slightly, but then it went sideways. But then they sold quite heavily, and so there's that move. So we have to be careful. What we want to see is like a nice move. So that would have been a sell. 1920. 1907. So it's a $13 move on that move. We're looking for like a strong crossover, fairly strong crossover. 1948 to 1982, $40. Wow. And 2016, there's the last of the stops. Right, so we might get to the round number today. Be really careful. This is probably blowing a hell of a lot of people up. There's a lot of robots out there in the world that are trading gold, and the robots are probably undergoing a lot of drawdown, if not blowing up. So be really careful if you're doing like using algorithms and algorithmic trading, such as robots and things. So our robot should be doing okay, but it doesn't handle risk off scenarios very well. But clearly a risk off scenario. See, there's the S&P, they're going along. So this is the X, A, B, C, D. That's B. We can draw a line, right? Horizontal line. Yeah, that's fine. Well, anyway, I didn't quite map it. I don't know if I can drag it. Oh, I can. See the reaction. So remember X, A, B. B is the body of the harmonic. C, and then D, which would normally be a buy. We did come up quite a bit, and then we had the reaction off B. And now ideally what would happen is that the herd would sell, and then that would be a nice support, and up we come. But it clearly you can see they've gone long, so we fell. So that's S&P covered. Done gold. We'll look at US 30. US 30 is fairly interesting. They were selling it and now it's sideways. So whether or not they're going to continue to sell, I don't know, or they might even buy. The thing is, if we go sideways, it can go either way. So we'll have to come back to this on Monday, I think, because I need a break. This is too crazy right now. And so what should normally happen is that we shouldn't really be selling at the big picture because we'll fall. And so they might have to release like a news event. And if the news event will have to be scary enough for them to sell it, okay? And do you think recent geopolitics would be scary enough? But it's clearly not working. They're going long. Oh, okay. I didn't know if that was going to load then. And they've gone really long DAX, quite strongly as well. See 51, 52, 53, going to be 54. So we're moving very strongly on the sentiment, and they're going to probably have to get punished. So robots going horrible because we're risk off, and yeah, it doesn't do risk off very well. And more information in the Discord about the logic and things. So without going too much detail, when we got the fundamentals, when we got the fundamental that we're risk off, the fundamentals are stronger than the retail sentiment. Okay, and that's the thing. When we're risk on, the fundamentals will come into play, but the sentiment does work better, right? So when we risk off, the fundamentals kick in, and when we risk on, they don't kick in so much. It allows things to move. So basically, because we're risk off, the fundamentals overpowered the sentiment, and this is why we're undergoing losses. Quite significant drawdown, considering we're using the 0.01, pulling counter a few stops today. And whether or not we're going to be risk on, it's unlikely because the herd are going long, and if so, then we're going to have a lot of stops being hit. So I think we might have to look at the stop loss distance next week, but we might not get many trades triggered because we've got that no-go condition on the VIX. So if the VIX continues higher, we won't be getting any trades. So we might be alright sticking to the 2.1 logic, but it only really works well in risk-on environment. Alright, and it's funny because the old one logic, the very first logic, would have been fine because we'd been up. So the old logic would be okay in a risk-off mood. This new logic doesn't do well in a risk-off mood. Okay, so maybe I'll have to think about it on the weekend, because ideally we would still open trades when the VIX was high. We could just simply reverse this logic. Maybe I'll have to think about it, but I did such a long day yesterday. It was probably the longest day ever, and well, I felt like it anyway. So today it's going to be taking it easy, and I'll speak to you guys on Sunday for the COP report, and that's it. So remember to trade safely. I got stung on the S&P, but you've got to know your exit, because if you don't know your exit, you're going to probably blow your account, you know, and you need to stipulate your exit, and you need to know your size and your risk as well. So I had a 2% risk to my account, which was pretty nasty, but you know, it's affordable, and that's it. So I'll speak to you guys on Sunday. Have a great day. I'll speak to you soon.